stock market today analysis for November 4th, 2022. Last trading day of the week. Nasdaq up 1.28%. S&P 500 up 1.36%. U.S. Treasury 10-year yield up 1.1 basis points. Gold up 3.25%. Bitcoin up 4.08%. Oil up 5.05%. When we get into looking at the charts, we'll come back and reference this. And I think this will illustrate why it's important to look at candlestick charts instead of just looking at this. Because this makes it seem like everything's rosy, right? Everything is just up. Everything is up. But what does it really look like? We're still doing some earnings. We had DraftKings. You like trading FUBU? You invest in some FUBU? It reported today. Next week, the heavy hitters are outlined there. You can get this information yourself at stocktwits.com and then check around that site. Get some free information. Hit up that earnings tab. I haven't checked out the newsletter or these rooms or anything yet, but you can check those out and let me know what you think about it. While you consider doing that, let's check out the VIX. Right here, we're looking at 6 months, right? The VIX is down. So it's a total of 6 months, but look at this. It's just been steadily going down. So the VIX is basically put together by looking at, I think, 10 days into the future at the purchases of put options on the, what index is that? S&P 500 index, SPX. So I think the VIX is actually created by looking at, I think, is it 10 days forward of puts being purchased on the SPX, which gives us an indication of how fearful are investors. If investors are fearful, they'll buy puts to protect their position. Well, they haven't been buying puts. So for some reason, people that are in a position to buy puts on SPX, which is pretty expensive, so some big money, is not doing it. Now, while that's going on, we have this risk indicator still closing in the high level of risk. We're looking at it on a different chart because over here at traderschoice.net, they finally put it into a chart, whereas before it was just this, so I started charting it myself. But this is so much easier, and this is showing us from the very beginning of this indicator being made, which was sometime in 2021. It's like around November 2021. So during that time, it's down here in the low, right, 50 to 100. And it has just been steadily increasing up. When I first started graphing it, it was already in the high. It was like at 210. So this is it's massively the stock market, according to this, has massively increased in risk. Yet for the last month, the VIX has been going down. Interesting. Bonds. Even though it's 8:24 Hawaiian Standard Time, I'm guessing the bond information is still available since it's the weekend. It's probably going to reset on Sunday, I'm guessing. We got some on the real shorter term bonds down a little bit. That 30-year really came up quite a bit today. 2.26. Still, we got this inversion where the 5-year you can get paid more money to lend money for 5 years than you can for 30 years. When you hear people talking about yield curve inversion, this is what they're referring to, and it seems to be, from what people say, an indicator of recession. And what I would suggest that you also do is just look around your local community. Do you see more businesses closing in the last 3 years or opening? Do you see things being easier financially and economically or harder? You can also use your own recession indicator called your brain. So consider also, you know, using the brain indicator and just thinking, are these businesses thriving or dying in my community compared to whatever 3 to 5 years ago? I'll consider doing that. But you know what? That is not financial advice. And if you need to check with your local authorities before you decide to use your brain, then please, by all means, do so. Let's look at the S&P 500. All right. So where was it? S&P 500 up by 1.36%. Well, let's look at that. Does that look exciting to you? Does that look like, wow, it's up 1 point? You know, that just looks, it just looks bad, doesn't it? It's like, wow, depending on how you look at the same information, it gives you a different picture. But what is good about it is look at this long tail here, this long shadow to the bottom. We traded all the way down there, but buying pushed it up here. It's been in this 3-day sell-off. It's hitting this 50-day moving average. At least it closed above the 200-day moving average, and maybe making a little short-term bottom here. But it's going to need a little more oomph to the upside. Had more sellers than buyers in there, with a bit of an increase in the selling volume, and just continue to be in this downward trend. It's trying to get above the 50-day. It's trying to stay above the 20-day. And let's look at the technology sector. Kind of the same. The only thing that really is standing out is it's below the 20-day moving average, and it didn't pop up nearly as much. Like it went up just a little bit from well, here's yesterday's close, so I guess it's up that way, but we're not really making much headway here. This could be seen as a positive indicator of this long tail to the bottom here, but not looking too rosy. Even what's been the strongest lately has been the healthcare sector. And the healthcare sector is still above that 200-day moving average, but it's probably going to have to do more than what we're seeing here in order to stay above that 200-day moving average, especially if the rest of the market is kind of putting weight down on it. So going into next week, it'll be interesting to see if the healthcare sector is going to be able to stay above that 200-day moving average. Financials got a doji. At least we got a green candle. Got to go 4 deep here before we got a green candle, but it's a bit of a doji. Sort of the same pattern where we got these little weak candles, but with a low here, kind of popping up a little bit. But the last 3 have been red, and so it looks like the market might be digesting some information here, figuring out what it wants to do. Consumer discretionary, more selling to the downside, even really testing this area right here, the support area. So for XLY, consumer discretionary ETF, if it breaks the 132, it might have a bit of a stroll to the downside. Industrials, okay, still above that 200-day moving average, but look at that, really battling it. Really battling it. And let me rephrase that. Not still above the 200-day moving average. Broke above the 200-day moving average. Closed above the 200-day moving average. We'll see if next week if it's able to do that. It from what I'm seeing right now, it looks tough, but you know, anything can happen. However, if I had to place a bet, which I don't have to, but if I did have to, I'm betting to the downside. I don't know exactly when, but I'm betting to the downside. Now that's at 8:30 p.m. Hawaiian Standard Time, November 4th, 2022. I might change my mind tomorrow. We'll see. IWM. Similar, kind of a similar pattern, but at least IWM is above that 50-day moving average. Getting that 20-day to curl up a bit, but it's still, you know, high, lower high, lower high, lower high. We're under that 200-day moving average, and we're going to need some more oomph to really break out from that. Qs, similar picture, but below all the moving averages, so not looking good. This 225 is probably going to be tested. I would imagine we're going to be testing that. It's struggling to stay away from it, but with the look of everything else, seems like we'll probably be testing that maybe next week. The dollar, okay, the dollar, hey, it popped up here, but now we're back to fighting this 50-day moving average. And let's go to 1 year. How often? Okay, back down here, it was really fighting that 200-day, or excuse me, 50-day moving average, but it seems like since then, this is the first time it's kind of been testing it so much. So we might end up being a bit, look at this, high, lower high, lower high. Was that an anomaly? It looks like, you know, in the pattern here, kind of going down, low, lower, low. We'll see, but until it's really breaking and continue to break, right, and falling lower, it's potentially just kind of going sideways. TLT, looking at those 20-year bonds, right here, 20-year treasury bond. Continues to be below all three moving averages. We see it bumped up here last week. Try to test that 20-day moving average and just falling short of that. Continuing to go to the downside. Here is S&P 500 on this line chart for the max that Yahoo Finance will give us. Got this out, I guess it's at 1 week right now. And I thought we were going to be testing more of this deeper into this channel, wherever the exact top of that channel is, somewhere in there. It's somewhere in here. It's not over here. It's somewhere in there. I don't know exactly where, but I think you can kind of get the idea. Got up about here, which is sort of in line with, you know, with that. That's the thing about drawing these lines and stuff. It's pretty subjective, but even if it's subjective, I mean, hey, you like vanilla or chocolate. That's subjective, but if you like one, that's the one you like, right? Even if it is subjective. So even potentially this is subjective, we still see it's somewhere in this range. You know, we know the top's not down here. I think we know that. I think it's somewhere more like this, somewhere around there. I don't know exactly where. We know it's not down here, right? That's not it. That's not the channel. The channel is somewhere kind of in that area, and it's not testing it. I've been yesterday, a little bit before that, I've been talking about maybe it's going to start grinding sideways and break out of the channel. I still think that could be a possibility because we We did set in a bit of a low here, but we got a low here, we got a lower low here. Made this little W pattern, right? Tested here, and bounced up, but not enough. And today, maybe it was yesterday. Yep. So yesterday you see it closed right in line with where it was kind of getting price congestion right in this area before. So maybe we'll see it kind of bounce in here and kind of just grind sideways to break out of that channel. If it goes sideways, then which way is it going to resume? I think there's just a lot of negative things going on in the world and the market and the U.S. economy that it puts a lot of pressure to the downside. So unless they start doing something that's going to give the results of quantitative easing, I don't know what else is going to, pop it out of here. I don't know. What do you guys think? What do you think about that? Well, oil, man, look at that. We see oil opened around 88, closed over here at almost at 93, 92.60. That really shot up past that 200-day moving average. Now we're in this area right in here. I could oops, right in there. I could see it getting stuck right in there, and I could also see, maybe plunger team going to try to push that price down for the midterm elections. If that's what they're trying to do, it did not work today. Yeah, so the price of oil just been, look at that, kind of got this bottom of a trend right in there, and it's kind of a weak top. Let's move out to 6 months, see if we can get some clarity. Yeah, even though it's like not exact, it's kind of right in this range of being a top. This is pushing up, so if this keeps pushing up, maybe it's going to keep blowing that top off. Maybe get back there and testing those highs. Gold went the opposite way. I as I've been saying, I don't have any reason to believe, fundamental or technical, that gold will go down to 300, but it's just hope. And as you might have heard, hope is not a strategy. So I don't have any base case to come up with a price. I don't have any logic that brings me to the conclusion the price of gold will go to 300. It's just I want it to. That's it. And gosh, if we can just identify with a certain thing, why can't I identify with the price of gold being $300? So I go down to the local dealer and say, hey, I identify with $300 an ounce gold, and that's what I want to pay. Don't violate my financial rights here. I want to buy gold for $300 because I identify with a $300 an ounce gold buyer. But I don't know if that'll work. I'll try it out this weekend. And it just really shot up, right? So we're down in this bit of a slide here, and we're still we're just kind of bottoming out here. We're getting stuck in this range. I tell you what, if you can find a way while it's in this range, if you can find a way, I have no idea. I never really looked at this. I think I told you guys before, I looked at trading options on gold futures, but it just was not exciting to me. But I think if the premium was good, maybe doing some iron condors where you got call spreads up here, credit spreads down here, maybe selling a naked call up here, selling a naked put down here. That potentially could work. Also could could bankrupt you. Could go either way. So that's not financial advice. Don't do that unless you're willing to take that risk of going bankrupt. But Bitcoin, boom, look at that, popped up, popped it, boom. Bitcoin seems to be, at least today, just kind of trading with everything. Seemed like everything went up. Today it seemed like dollar down, everything else up. And there seems to be some correlation lately. Dollar down, XYZ asset up. Dollar up, XYZ asset down. seems to be lately, at least for the US dollar. I don't know if that's happening in other currencies around the globe, but yeah, so that's looking positive for the technicals of Bitcoin. Over 21,000 now. So we see this little bit of a, like the ceiling there, broke through that, and maybe it's going to start building another base there. And as I said before, I don't know what your video is on, if you live in a state that allows you to trade and or invest in cryptocurrency, specifically Bitcoin, then if I were you, I'd be figuring out how to trade it. Because the people that only do the hodling, they're missing out on shorting it. And you know what? You can, if you're shorting in here, you're making money. You shorted this, you made money. Now go long here, short here. Even if you only, you're only getting some bucks out of that. If you're only able to go long and you bought at 50,000, you're down money all this time. But if you're able to trade, if you're able to do more than just buy and hold, if your skill set is higher, and it doesn't take much skill to be able to buy, like pretty much, I guess that's all the data they're going to give us. Pretty much everybody can buy. So if you are able to trade technically, look at this. You could potentially, like, look at all this volatility here. You know how much money you could be making on this volatility if you can be trading that, shorting it here, getting this ride up here. So here's my point that I'm trying to make. If Bitcoin is at around 21,000 now, if it's going to go back up to here, 65,000, and if all these internet gurus are right, and it's going to go to $1 million, then guess what you're going to do? You're going to trade it up to $1 million. You're not missing out. It's not like the only way you can collect income is by buying and hodling. No, you can do both. You could trade this all the way down. You know how much money you would make right there? You know how much money you'd make through that? And maybe you don't hold it one position open. Maybe you're opening and closing, opening and closing. Figure out a way to make it work. It's going to take more financial intelligence to technically trade than it will take just to buy and hope. So, leave buying and hoping to people that aren't like you and aren't trying to better themselves. So learn how to technically trade. And you probably know what I'm going to say. Paper trade. You want to learn how to technically trade, find some stuff to paper trade. I'll tell you what, these chart patterns, if you can paper trade the S&P 500, you can paper trade this. There's going to be some nuances to it, right? It's like if you can swim, you can swim. Now, if you swim in a river and you swim in a lake, there's some differences, but you still know how to swim, and you just adapt to that environment you're in. It's going to be the same thing. If you can technically trade Bitcoin, you can technically trade oil. So get a paper trading account. Start learn how to paper trade. Hopefully, if you want to trade Bitcoin, hopefully you got a place to paper trade Bitcoin. So that way, you're going to swim in a river. You just learn how to swim in the river versus learning to swim in a lake, then go to the river. But if that's the only thing you can do is learn how to swim in a lake and then you go to the river, it's better to learn how to swim than drown, right? And in your process of learning, don't forget about your good buddy Brent. Go to iofsuccess.com. Download some stuff. Tell you what, this has been such a lifesaver for me. Selling cash secured put options on stocks that I don't mind owning the rest of my life if I had to. And then from there, I start selling covered call options. Sometimes I hold these stocks for a long time. Sometimes I turn them over quickly. It all kind of varies. But when you know how to do this, your life can be a lot better. Because when you're just trading, technically, more than likely, you're going to have to be monitoring the position a lot more, and you're in an outcome that you lose money or make money. When you structure this properly, you're in an outcome that's very hard to lose money. Most of the time, it's like no matter what happens, you win. And that's a great situation. So you can be doing that and doing some other trading. So go check that out. You guys have a fantastic day. Bye-bye.